Hey everybody, we are back this week. We have a guest, Ram Ahluwalia, who is a friend of mine going back way back when. It's my New York days, shortly after college. And Ram has had a storied career in the financial world. Maybe he could tell you himself in a second, but my understanding of it is that he used to basically run the credit card marketing for one of the nation's largest banks, and then he did some other stuff, and then he sold a startup that he was very successful in. He sold that and created a new finance company where he's now, I guess, consulting family offices and stuff about cryptocurrency asset ownership, among other things. Is that more or less accurate, Rom?
Yeah, look, I grew up in banking and markets. I love building businesses. I love solving problems, and it's been a lot of fun. And yeah, David and I known each other, I think, since post financial crisis or around there. We used to live near each other. I lived on 45 Wall Street. He lived on Gold Street, and no, it's been great. Really enjoy staying in touch with each other.
Yeah, no, you definitely have shown yourself to have a great finance mind over the years, aside from being a friend. And it was interesting one day when I found out that you had made the jump over to Bitcoin and crypto stuff, and that to me was like some big some big new indicator, right? For someone like you who has come up through the ranks in like mainstream finance, for you to see the opportunity there. I re-rated crypto like the same day, and internally, in the sense of like what I thought of it. So
I have a funny story for you around that. So back in Q4 2013, I was asked by a friend who's a VC. His name is Christian Lawless. He runs Conversion Capital.
mhm.
And he said, Ron, look, I'm looking at this startup. It now goes by the name LedgerX, which was acquired by FTX, a crypto derivatives exchange. Back then, it had a really horrible name and an awful looking PowerPoint presentation. And he said, look, one or two things around derivatives exchanges. Well, why don't you take a look at this? So I looked at the business plan and met with the founders. I said, Christian, and I had this all in an email. I said, I would pass on this derivatives project. It's kind of interesting, but Bitcoin as a decentralized technology is super fascinating. So that was December of 2013. The funny thing about it is that
Wow.
if we had all just bought Bitcoin back then, the rest is history. So I've always, and it's funny, we caught up, and I brought that story up to him. He's like, yeah, it was really just kind of keep it simple.
Yeah, keep it simple to like extrapolate on that. So many businesses and so many ideas and individuals have somehow run up upon the rocks over the years and have not made money from cryptocurrency, even though the biggest cryptocurrency, they say now, if you bought like at any point in the last 6 months or last 12 months, you're up on your buys. And yet there are people somehow who've managed to turn it into some bizarre Icarus story, the melted wings. People just trying to do too much. When here the mainline crypto, the first crypto, has returned 1,000+% over the last 5 years. And its main competitor Ethereum has also returned over 1,000%, I believe, over the last half decade. What's driving all this? Like, why is it seems like the price being back above 100K a coin is almost people hedging against something, but what are people preparing for?
Right. So there's the long-term drivers and the short-term story, what's happening now. The long-term, bigger picture drivers, they go back to the Genesis block when Satoshi or Jack Dorsey or whomever that is was making a commentary around these bank bailouts. And after that, of course, you saw quantitative easing, which was a creation of money when the Federal Reserve is buying the debt issued by the U.S. Treasury and creating money to go do that. I think it's hard for people to like get their head around that that's what happens, but that is what happens. And then second, you had tremendous fiscal stimulus, especially post-COVID. If you recall, during the lows of COVID, Bitcoin's around like the 7,000 level and lower. And then third, you have the loss of trust in institutions. And those include banking institutions, They include loss of trust in the capability of the U.S. government to manage its finances. And that brings us back to where we are today, where the House passed a budget which is going to increase deficits for the next 10 years by $2.3 trillion. And we are in wartime deficit spending mode. We have been. We were in that mode since COVID under the last admin, and we're in that mode here. So people look at that and they say, gee, how much is this dollar worth? The dollar has been declining, and other assets, including gold and commodities and equities and real assets, they've been increasing in price. So those are some of the factors that are driving it. I think there's another factor too, which is the sanctions regime on the Russia-Ukraine war. By the way, I'm all for sanctions on Russia, but people do say, gee, hey, maybe we, there's a role for international currency, international money that's decentralized and not subject to sovereign control.
Right. And
their privacy and ownership considerations around that has a lot of appeal to people. To be able to move money is significant. I wonder how many people from China are exiting the country and using digital assets as a vehicle to do so. So those are the other dynamics that I think are elevating Bitcoin and digital assets to the fore.
Yeah, all interesting. Yeah, I think it's created this new meritocracy, right? Where before it was almost like who could get themselves closest to the central banks, which are the faucets of value. And I realize that's a simplification, but just as kind of a reductive statement. It's whoever could get themselves closest to the money printer is the one who ruled the roost. And here we just by default the money's issued, right? The same number of coins per block until the next block halving. But that part's solved. So there's really no policy debate around issuance anymore if we all switch to a Bitcoin standard. And instead it's whoever is best at selling things that people are willing to pay for with Bitcoin, and then alternately people who've sold off legacy assets in exchange for Bitcoin, and then a third rail of people who are better at stealing it than other people. And there's at this point, a whole subculture, I would imagine, of ne'er-do-wells, right? Because there's so much value out there. And it used to be there wasn't that much value in hacking somebody's hard drive. To hack it, the amount of effort required to target somebody's IP address, get beyond their firewall before their ISP just tumbles their IP address and gives them a new one, right? To actually get in there and to sift around through somebody's hard drive, very labor intensive in a sense, like Mission Impossible type stuff, unless you're a government. And to what end? To grab some person's PDF files they probably also have at work, just about their company's, going ons. It doesn't matter that much. None of this information matters. But once money is information itself, once it's a private key sitting somewhere, you suddenly have this motivation to crack into everything. And so I think it's changed the dynamics of internet security and computer science, aside from the dynamics of you no longer have a money printer situation.
I agree. You've got the Lazarus Group in North Korea, where this is where they're one of the primary mechanisms of generating foreign reserves. And it's lucrative to do so. The level of cybersecurity and hacking is just at incredible levels, and it's only going to get worse with AI. I think the stablecoin angle is quite interesting too. Congress looks like they'll be passing that bill soon. And I think it's a very powerful way to help the U.S. government get an additional source of financing for the debt issues. And it's also a way to combat China. And maybe that's something we can double click on.
Yeah, could you first define for people what a stablecoin is? Because it's probably a small percent of people who finally understand Bitcoin from listening to this show. And now they're wondering if they've ever used a stablecoin and what it is. And then, how would this create a moat against China potentially?
Sure. So a stablecoin is a digital asset, and it's pegged to something, often the US dollar. The two leading stablecoins are USDC, issued by Circle, the United States. They partner with Coinbase. And the second is Tether, which is also backed by the US dollar, although it's hard to get at the full audit and reserves there. There are other stablecoins, sometimes backed by gold, euro, and so forth, but most predominantly by the dollar. So these stablecoins are on different networks, such as Ethereum or Solana network, and people can use it as an exchange of value. And the stablecoins can also be backed by treasuries or yield-bearing assets. So they can generate a coupon, right? Imagine having a wallet where instead of owning dollars in your wallet that are not earning interest, now you have a digital wallet and you have stablecoins that are earning yield for you. That's incredible. And you don't need a bank. You don't have to rely on a bank. So that's an incredible form of innovation that we haven't seen in financial services in decades. So this is up there with wires and ACH transactions and the ATM machines. Now, where it gets very interesting around China is that, well, one, these stable coins should advance US dollar hegemony. Imagine paying an entrepreneur in China in US dollar stablecoin rather than in renminbi. What happened then is you're going to have that entrepreneur in China essentially move off of China as their platform, move off of China as their depository bank. And it's actually very easy then for these entrepreneurs to gradually exit their country, right? China has capital controls limiting the amount of money you can move out of the country. I think it's 50,000 or 75,000. Well, if you're generating revenue in US dollar stablecoin off-prem, so to speak, that really can weaken China substantially. I think that's underappreciated.
Interesting. So shifting gears a little bit onto the tariffs, I think part of the idea here, at least according to the rhetoric, is that we want to quote unquote decouple from China. We want to make things here. And of course, the critics of that say we don't have enough domestic productive capacity yet without consumers really feeling a price hike and possibly an availability issue. So why is it that the U.S. suddenly wants to antagonize China? How does this help us? And how do tariffs close the gate in a sense?
So why antagonize China? It comes down to a few things. One is China is a major hacker of American intellectual property. Cybersecurity hacks, espionage hacks. They're very good at what they do. A lot of American enterprise is just under a constant barrage of these hacks, some of which are disclosed, some are not. One that was disclosed not too long ago was the hacking of Verizon, AT&T, all these big telcos, and identifying the location and the other information of American politicians and various leaders and executives. Sensitive information, right? That's just one that came to the public that was disclosed. So that's one. Second, China has significant influence, including over Russia, which maybe you could argue is a vassal state for China. Russia is getting the semiconductors from China, other needs. And also, China has aspirations to control Taiwan. You could look at China as really the only significant geopolitical peer competitor to the United States. No one else really has a shot. China also has an edge in battery technology. The batteries are far more efficient in terms of capacity, recharging, and weight than the United States. Like BYD is just way ahead of the United States on batteries. Second, China's ahead on nuclear fission technology. They can build reactors faster. They have less safety regulations. They can do it quickly and get them online. The United States forgot how to build nuclear reactors a couple of decades ago. China's all set on fusion, arguably. There's some satellite imagery identified China's got this big, massive fusion plant, bigger than like the ITER plant that the West is developing. That's significant. They're ahead on drones and robotics, and a lot of future warfare will be drone-based. They're competitive in AI. They're behind on AI, but they're competitive, where Huawei is creating chips that are maybe 1 to 2 years behind NVIDIA. There's less dependence that China has on ASML. So China is credible, right? They're exporting. They're leading in solar and energy. The world needs more energy. China knows how to create energy better than anyone else. Driverless cars and EVs, they're ahead on that. You have these cars coming out of BYD and other brands that look like Porsches and Rolls Royces and all the rest that are very cheap, economical, and high quality.
Mm-hmm.
So, those are the reasons why the U.S. is concerned. It's like, hey, gee, did we just hand over our supply chain and manufacturing to China? Now we're dependent. Think about what happened with COVID, where you had to order these N90 masks from overseas and dependencies in the pharmaceutical supply chain. So that's the motivation. The other motivation is trying to limit and curtail China's ability to grow into a superpower. So those are essentially the reasons why the Trump admin and even the prior Biden admin has taken some actions to try to rein in China's hegemonic potential.
Mm-hmm. Yeah, to make a Revenge of the Sith analogy here, I feel like we're entering, by we I mean the U.S. is entering this new era where it's as if we're switching over to Imperial Palpatine era, and we're giving up Chancellor-led Republic era. Because once we overtly admit that we're an empire that's competing with China, which is what Trump's doing, he's basically making countries sign on the dotted line and saying we want to be your superpower of last resort. We don't want you using China. And so to overtly say this and do this, I see it almost like we wanted to offshore production decades ago to lower the input costs, right, and to make more money. This is something that American companies actually wanted, and they were successful in the Chinese market. And after decades, actually training their market to produce relatively high quality goods. And then overnight, they're turning their back on something that's been built up, which is just going to create short term a less wealthy consumer. The consumer has to pay this switchover cost, right?
Yes, exactly. So there's a difference between objectives and methods, and the effectiveness of these methods.
Right.
If you want to really curtail China's aspirations, what you should do is coordinate with your other allies in a deliberate way and build a tariff wall around China. That's the right way to do it, and that's not what the administration did. And so actually you have European nations cutting deals with China, and Japan is holding out, it looks like, on a deal with the United States, and apparently so is the European Union. If you look at Trump's latest comment this morning, where he, quote unquote, recommended 50% tariffs starting June 1st. So, but it's, as you pointed out, like, look, these tariffs are, when someone says we're going to put tariffs on China, what they really mean to say is we're going to have import duties on American businesses that purchase from China, and they're paid by these importers as a sales tax. Okay, that's actually what's happening.
Right.
Sales tax, and that tax rate is going up, and it'll be felt by either American consumers or American business. If it's felt by American business, then earnings will drop. So that would impact primarily small businesses. The big companies like Apple, they'll take a hit. They'll have to invest in CapEx and new supply chains. But they have the wherewithal to go figure this out.
Right.
Earnings could be impacted there. The small businesses, they don't have the capital and liquidity, the working capital. I mean, they're in a tough spot. It's hard to just refactor your supply chain like that overnight. I mean, these are deals, contracts, and know-how and specialization that's built up over a very long period of time. So, and then consumers will also feel it in terms of higher prices, especially for things like automobiles, which is the number 2 most significant expense right after your mortgage costs. And now we have mortgage costs going up because Europeans and Asians have less interest in owning the dollar, right? The dollar is declining in value. There's less interest in the world to hold U.S. bonds. And what that means is interest rates go up. If the U.S. bond market interest rate goes up, then mortgage interest rates go up. So that's what we're seeing now. And we have to see how all this resolves, and if can Bassett put Humpty Dumpty back together again.
Right. Related to this, I was skimming on X one evening, was just skimming around and saw your live stream pop up. So I started watching it, and you were guiding people through how these shocks to the system would affect publicly traded companies, but especially small businesses, as you were just saying. And there was an urgency to what you were saying that I think a lot of people felt like, oh my God, what Trump's doing is going to make every business that sells anything materially less profitable in the short term, right? So there was this panic, and then I feel like there was kind of a reprieve that was issued. But if you take things out logically, just based on what he said earlier today about how Apple has to pay a tariff on every iPhone that's not made exclusively in the US, which is not yet a thing. There are no iPhones made exclusively in the US, I believe. Right. So he's saying basically 0 iPhones will be non-tariff. So this scary statement that shocked Apple shareholders. I don't think we're through this policy structuring yet, I guess. And
no,
it seems like for whatever reason the market's not truly believing that Trump's doing something, but it seems like he's doing it. It seems like he's president, and tariff policy, if it's enacted, it will have an impact on the bottom line. It won't exist in this kind of gray area forever.
Yes, there are winners and losers from tariffs, right? Insurance companies are relatively immune from tariffs. Insurance companies are up today. Equity investors are rotating away from retailers, companies that have a lot of merchandise exposure. I think like Abercrombie and Fitch, those names are getting hurt.
Mm-hmm.
So equity markets are trying to respond. Apple's obviously down. It's been in a bear market. And it's not easy for Apple to comply here. Apple, it's really funny, going back to the Kabuki Theater, about a month ago or so, they issued a press release, which Howard Lutnick kind of trumpeted on CNBC, saying Apple's committed to invest $500 billion in the United States. I say, gee, that's a big number. How does that come together? Apple's got a couple $1 trillion market cap, but any investment's an expense for a business. It's an expense.
Right.
Presumably it creates productive value. You get more done. You invest in a plow, the farmer can create more wheat, etc. But it is an expense initially. So anyway, look at Apple's CapEx expenditures, and they're like they're very small, $13 billion or so per year. So if you look at the press release, it says Apple agrees to, quote, invest and spend. In other words, they're including their operating expenses, not just their capital expenses. Capital expenses are things like property, plant, and equipment.
Mm-hmm.
It's the supply chain. Operating expenses includes like wages, rent. And the numbers just don't make any sense. Like, you can't get to the $6 trillion if we're going to import this capital. And the other tension, or really contradiction of this policy, is that when you import, you're handing foreigners dollars. And those foreigners, they can only do 2 things with those dollars. They can buy American merchandise or services, or they can invest in the United States. There's nothing else you can do with an American dollar. So the idea of attracting foreign capital flows and putting up tariff barriers are incompatible. And that's why the dollar is declining in value. That's why bond yields are going up, which is contrary to what their policy objective is. There's a lack of coherency in the objectives of the policy. And then I think, you had Lutnick probably in a facepalm moment when he was talking about how they want to bring jobs from Vietnam and have it automated in the factory. Well, like, hey, where's the win for the American worker? Where's the win for, where's the win here?
Right.
I see a bunch of losses. I see how Vietnam gets hurt. I see how Nike shareholders get hurt. I see how Nike consumers pay a higher price. So I think a lot of it is trying to sanity wash some incoherencies. And the government is trying to raise revenue to pay off deficits. That's a legitimate concern. We got these wartime deficits. But do you do that by raising sales taxes on Americans? And do you do that by raising the financing costs for the United States government, which, the cost of financing is now higher.
Right.
It costs more for the U.S. Treasury. So, like, the left hand is doing one thing, the right hand is doing another thing. They're not in coordination.
Well, I find it fascinating that there's been all this, as you call it, kind of, incoherence or kind of instability around Trump's tariff policies, all this kind of variability in messaging, and yet night and day difference. His crypto policy has been very sound and I think confidence instilling, interesting. It's not as if there's different tax rates for each blockchain and stuff. It's been
Right.
very much like the platonic ideal of what people in crypto were asking for. The national government is now handing down. Now, what do you make of that rapid change? I mean, this seems like a totally different world from what I call Biden December, right? The last effective month
Yes.
of the old administration.
It's an incredible 180 degree from former SEC Chair Gary Gensler, who really did not act, and he could have. He was the chosen one, if you want to go back to the Star Wars metaphor. He was Anakin Skywalker, and it was going to bring some balance to the Force, and he did not bring balance to the Force. So, yeah, I think it's partially because, one, Trump got elected in no small part due to crypto Bitcoin contributions, so the Fair Shake PAC, in a very material way. We got like hundreds of millions of dollars in contributions, which started to flow in after he spoke at the Bitcoin conference in the summer of last year. And then you have David Sachs, his crypto czar, who understands these considerations and trade-offs, and he's the one authoring policy and then putting it in front of Trump's desk, and then Trump signs executive order. So that's why it's more rational, right? That said, I would say, there is, same thing like accepting the Boeing 737 from Qatar, or, when you have the top 200 token holders of Trump meme coin, which I owned for a hot minute on that weekend, by the way. I made a nice little quick trade on that. I happened to be at the crypto policy ball in DC when it dropped.
Nice.
So everyone was trying to figure out, like, is this real or not real? Anyway, but we were out 2.5 days later. You have to in a moment like that. But, the issue is that it's creating a bad taste when people see, gee, it looks like they're self-dealing, or, it's pay to play, pay for access. Come to Mar-a-Lago, buy a table, or buy these tokens, you have access.
Right.
And you will be heard. So that's not so much policy, but I would say it's creating a distaste. The other thing I think is the miss is the SEC should be going after fraudsters like Richard Hart. Like, the digital officer community is happy to see SBF go away, happy to see Alex Mashinsky go away, the Celsius founder. Enforce against frauds, enforce against that, enforce the law, allow people to innovate, create, and build, but enforce the law, enforce fraud. Why let a guy like that go off the hook? Or other people, like the guy that created a Tesla competitor for these semi trucks.
Right. Yeah.
The pardon there. So
Nikola, I think his company was called.
Yes, Nikola. That's right. So there are wins and misses. I think David Sachs has crafted a sound approach overall, and stablecoin is a huge win, and that's also a win for the Trump admin. Just calling a spade, but you're getting baggage for some of this stuff too.
Yeah, no, so you use the word rational, and that's definitely how I would describe it. Is it seems like it's providing these guardrails and these expectations that for once people can finally kind of bet on, if not bank on, and actually start to take it more seriously now that a president is, instead of trying to slow it down through choke point 2.0 type stuff, is actively talking it up. And, so, as critics say, talking it up too much. But I think it's total fascinating change of course for the government and for the U.S., and it all makes sense. If it's going to be a new, pipeline of transactional value, why would the U.S. not want it to be at least tolerated here, like everything else is eventually?
Yes. It makes sense that we should have a digital money that complements the internet. It's a natural consequence of the internet, where transactions and e-commerce and payments are taking place all day long. We don't need an antiquated old rail system with these legacy credit card companies and legacy banks. So it's time to go from dial-up modem to a decentralized, permissionless, secure by encryption technology. And so, I think it's very, very interesting. And we're going to see the financial services landscape evolve over the next 5 to 10 years because of this, because you don't have to have your deposits at your local bank. It can be on chain. Now, there'll be some bank behind that, it's a stablecoin. But the winners and losers in the financial landscape will be significant.
I think so too. I think we'll leave this with that, unless you have any final comments for listeners as we head into the weekend here. But yeah, I think it's definitely going to dematerialize banking further than it already has, if I had to guess. But any final thoughts?
No, I think overall, it's great to see competition for the legacy incumbent banks. It's great to see the innovation on the stablecoin side. And happy Memorial Day weekend. Honor the fallen and enjoy time with your family and loved ones.
Hey, thank you so much, Ram. Appreciate your time.
You bet, David. Be well now.
All right. Thank you. All right, guys. Well, that was the interview. And appreciate Ram coming on the show. Again, we head into a holiday weekend here, so you'll hear from us sometime late next week. And links in description will have Ram's presence over on X, formerly Twitter, as well as my books on Amazon and a link to the Fulcrum News website.